Good afternoon and welcome to the Daily Forex Review. My name is Mark Principato. Let's begin with our dollar index chart. So starting off, if you looked at the Twitter feed earlier this morning, these were the levels that I posted. 83.65 support, 84 even resistance, and 84.15 resistance. Now as we could see, after the stock market open, which is what this red line represents, volume came into the market and started to drive this dollar upward. Clues came with this indecisive candle right here. After we had this little sell-off off of this 84 resistance, we had a harami pattern right in there. You could see between these two candles. That basically gives us an idea of support or resistance. In this case, a support. Not only a support, but a higher low. Now obviously if you have a higher low, that typically can lead to a higher high. Now what was tough at the time was we had this lower high area compared to the recent high. This possible lower high could have led to continued selling, but the thing is it didn't. We never took out this 83.65 area support. We didn't even come to this low over here around that 83.71. A sign of strength appeared and it started pushing highs ever since. It took out this swing high over here. We took out this 84.15 resistance to a new yearly high. So again, this bullish structure is still intact, and I would imagine that this thing is going to continue to make highs until it stops. Alright, now one thing we can say about this for the bears anyway, is it didn't make a dramatic new high. Right? This was our recent high and this is our new high. It's what, maybe a 10 pip, 15 pip difference. It's not enormous. So this still has potential to fake out up in here. But at this point, there's not enough evidence of that. So I'm going to have to assume that this thing is still strong and wants to continue. We'll look at it from there. Now, in order for this thing to reverse or to get more bearish, to get that confirmation, I need to see at least a swing low get taken out. This level over here, the 83, 81 area would be ideal. Alright, so we take that out. That would be some signs of weakness. I would look for more selling in the market and strength in the euro. Until then, I'm looking for higher lows and higher highs in the dollar index. Let's move on to the next chart. So now we have the S&P futures. Now this chart's interesting. It was very reluctant this morning. Now we've come off this double top high. We've talked about that. That was the previous week. Now today we made a lower high just off this 1350 area. It sort of touched it. As we sold off into the supports, right, the 1331 support, we had some selling with conviction. We can see with this large 4-hour candle right into the daily pivot. Now what's most interesting about this is today's low, and we are still above the low of 2 days ago, or basically, what is that, Friday. Friday's low was here at 1319, and we are trading at 1328 right now. So to me, as long as we stay above that swing low, this thing is not as bearish as it looks. Now yes, we do have bearish momentum, but we do not have a solid trend in place. This can turn back up at any time. If anything, we have more of a range bound situation. So if we bounce off this 13, 18, 19 support area, we can easily go back into the middle of the range, if not the top. Now when we zoom out of the S&P even further, we can see that this is not exactly the most bearish structure. It's not the most bullish either, but we can at least make an argument for higher lows like there and like over here and slight higher highs. The question is, can we make the new high? Until then, I would go with the range bound scenario until this market has more direction. What does that mean for the euro traders? Well, it means that as this thing recovers, euro may see that bounce off of its low, and I'm talking about a significant bounce. Let's actually go take a look at the euro now. Alright, so the conclusion on the S&P is it's not as weak as it looks. Let's take a look at euro dollar. Now here are the levels that I pointed out this morning. The 2065 was the yearly low. Clearly we took that out and we're trading below it now. So the bears are still in control. As a day trader, as a scalper, I would prefer to sell resistances if we can reach one. So the old support, that 2065 area, perhaps 2070s, should serve as a good intraday resistance if we have the opportunity to revisit that. If we get more of a sustained bounce, we can see another retest of this 2115 area, and anything pushing above that, we're looking at the 2155 area. Okay, you can see we have daily pivots in the area as well. So these are the potential turning points where I would be looking for selling activity to re-enter the market. As far as selling on these lows, typically I think it's a high risk behavior, not the greatest idea in the world. You're better off waiting for at least one of these resistances to be reached, all right, before you look for selling. As far as buying, well, as scalpers we do have that luxury to look to buy these types of bounces, but you have to be quick about it and you have to keep your expectations small. All right, so that's pretty much where we are. These things, I would be looking for retracements in these things, especially since the S&P, as I just pointed out, is not really taking out that previous swing low that we talked about around 1318. All right, so just a few things to keep in mind. All right, so that's it for now. Join me next time for my next Forex update, and we'll go from there. Enjoy the rest of your day.